Happy Saturday, everybody. I thought I'd come back at you again today on Saturday because I know none of you are outside. It's already 110. So I'm going to a movie today, air conditioning at 4 o'clock in the heat of the day. I forgot what popcorn tastes like. I haven't been to it so long. So that should be a lot of fun. But I ran across some numbers this morning and I kind of wanted to go over them. The first one that jumps out of me is today we have 5,982 listings, almost 6,000 listings for a Saturday. We haven't seen that in well over a year. So that's a significant jump. But some of the numbers I'm going to show you is they're talking in terms of percentages. So the percentages are going to be huge, but I'm going to show you that the numbers are small. But there's one thing that is really not disputable right now, and that is that things are changing. So when I look at some of the numbers that are going on out there, let me throw you over here to the Crawford Report real quick and show you that this is an index, okay? So we talked about it last time. So Gilbert's at 448, and they're declining at 14% a month in favor of buyers. And at that rate, 14% a month, we are in a normal market by November. That's pretty encouraging. So there's going to be months where it goes up, goes down, but we're trending down. So for the second week running, we have all 17 cities moving in the same direction over the last month. So it hasn't changed. Favorable to buyers. The cooling trends becoming more apparent as inventory levels start to recover from the extreme low reached 3 or more months ago. Sales counts remain very healthy, but the number of listings under contract is in a falling trend. And I kind of went to my handy dandy little chart, and I'm going to show you what they're talking about. But most of the areas are seeing higher active counts. But again, these numbers are kind of small. They're saying Phoenix minimum listings was at 530 in February. And now we have 809. So that's up 53%. So the 53% number looks huge, but the actual number of homes is not huge. Mesa's even more shocking. Their minimum was 124 on February 17th. Now they have 255. That's up 100%. So you're going to hear Mesa listings are up 100%, but not that many homes, folks. So let's do a little deep dive in here. And I made this chart. It's a little dizzy, but what we're seeing is I track these things under contract, contingent, and pending. So it should be UCB, not UBC. CB, there we go. See, I fixed things live here for you. Under contract, accepting backups means that, they got a contract on their home, but they're still willing to look at backup offers. Contingent means they've accepted your offer, contingent on the fact that you need to sell your other home. Pending means they went straight to pending, took it off the market, and they don't want anybody else coming in the house, and they're not looking at any additional offers. So that's the difference. We did see a jump in pending go up, and I'm going to show that to you, but then I'm going to show you how it's going down. Because right now we have in total 4,151 homes came on the market in the past 7 days, of which 3,774 went under contract. That's a difference of 377. But we did have a difference as high of 544. So shrinking just a little bit over the past day or two, nothing major. But here's the interesting numbers when I want to compare it to what the Crawford Report is telling us. So I looked at pending. That's kind of a busy little chart, but you can see that little blue line right here. Let's see if I can draw a line there. No, I can't. I probably could. I'm just not going to spend the time doing it. Where it says 2,500 right here. See how pending listings were up, and now they're gradually declining. Here's under contract. This is where they've really declined the past few weeks. They were way up here, and now they're dipping down. Contingencies tell you the story of the entire market. People just are not accepting contingent offers when the market's hot. They took them back here till the cows come home. This is way back in September. These are holidays, Thanksgiving, Christmas, and this is now. Now, some of the reasons that we may have a bit of a slowdown is I've been talking to a few agents over the weekend, and this weekend is slow. It's slow for a couple of reasons, and not just here, but nationally. So talking locally here, I'm talking with an agent that sells new home construction nationally. And she told me that, she makes weekly calls of people that are looking at new construction. And now they're telling her You know, you guys have had 2 price increases in 2 weeks. We're sitting it out. We're going to resale. We're out. And watching Matt, the mortgage guy, on One Rental at a Time's video yesterday, he was saying that people that he is calling, they're saying things like, you know, we want to buy a house, but we haven't had a vacation in a year and a half. So we're going to go do that first. Then we're going to come back and think about it. So there's a few dynamics. The other third one, I think, which is number one and the big one, is people are just simply getting outpriced. Interest rates are still low, but the price is going beyond many people's means. And so they're going to sit on their hands. And as they sit on their hands, these numbers that we're seeing in the Crawford Report are telling us right here that it says normal levels of supply are still a long way over the horizon. All 17 cities have CMI readings over 300, which indicate there are plenty of price increases still to come. However, the pace of appreciation should start to fall off if the CMI continues to show a slow declining trend. So what they're saying is, you know, with the numbers where they're at right now, you can expect prices still going up next month, the month after that, and probably the month after that. But as they decline, the level of increase that you see is going to start to slow. It's not until inventories get to a normal level, which are months from now, that you'll see them stabilize. Will we see them fall? Hard to tell. Really hard to tell. I don't have a crystal ball. It's also possible that the central banks, if we still keep heating up like we are just going to finally have to intervene to cool the markets and start pulling back and eliminating their purchases of mortgage-backed securities known as MBS, because they're doing it about $40 billion a month right now. So if they pull that back, interest rates are going to go up. Real estate's automatically just going to kind of put on its brakes. They're certainly not going to go up to the pace that they did back in the late 70s, early 80s. But right now, I think anything over 4 is going to slow us down considerably. So we're all spoiled, and with price increases that high. So these numbers that you're seeing are going to look like large percentages, but keep in mind for the Arizona market right now, it's only 400 homes. The number of homes going on the market and the number going under contract, it's tiny, 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 tiny. So, but if it continues, tiny numbers can grow into big numbers over the next few months. So I just wanted to get on here and share that with you guys and let you know some of the new numbers that we're seeing. And it does seem to be a national trend now. Some markets are seeing it worse than others. Right now, we are still hectic to insane when it comes to home sales and people visiting homes. But this weekend, tomorrow is slow. Father's Day is going to be slow. And I'm seeing that across the board. Even my friend that gets appointments made, she goes, nobody's booked anything for tomorrow. So evidently there's some good dad barbecues out there somewhere. So none of my boys have called me yet, so I'm waiting. Everybody stay safe today, drink lots of water, and if you're a dad, have a great, fun Father's Day tomorrow. See you Monday.